This is really about being free to create what you want your life to look like. We each are our own hero. And how do we take the challenges that come our way and see those as the birth process of us becoming heroic? Can you meet that judgment that ultimately will surface with neutrality?
This is the Wall Street Coach Podcast with Kim Ann Curtin.
Aloha, everybody. Welcome back to the Wall Street Coach Podcast. I'm very excited today to welcome Shane Dorian. Lucas and I are both really lucky to have Shane here. Shane and I got introduced, I think, a year and a half, 2 years ago by a mutual friend, Mike Field. And Shane is not only a big wave surfer, which is like, I don't know, it takes my breath away to even think about those waves, but also a trader. So I invited Shane to come on today to speak to you traders. And I'm really grateful you're here, Shane. Thank you.
Thanks for having me. Good morning, you guys.
Good morning. Good morning. So here's his official bio, but he'll fill in any blanks I leave out. Shane is an American-born surfer, born here on the Big Island of Kailua Kona. He lives about an hour and change from me up here in Waimea. Shane spent 11 years on the World Championship Tour as a pro surfer. He left competitive surfing in 2003 to focus on big waves. He's one of the best in the world at big wave surfing. I think the best. He is also the designer of a safety suit that brings big wave surfers up to the surface quickly after a terrifying wipeout he had in California in 2010. He's also a bow hunter. And yes, as I said, traders, he is also an experienced trader. He's been trading since 2004. And he's also an ambassador for Billabong, among others. Also part of an incredible documentary called Momentum Generation. Can't recommend it enough. And it's a must-watch really about him and other surfers and how they all came up and became really this tribe of brothers and surfers before that industry really existed. You guys kind of put it, I think, on the map. Would you agree, Shane?
I don't know if I would go that far, but it was, part of like the story of, surfing history at this point, just like every other sport, there's like different generations. And we were pretty lucky, growing up here in Hawaii is kind of the epicenter of surfing. And so we just became really good friends. I would meet surfers from all around the world that were younger. And so like my friends from California and Florida and all from around the world, each year we would kind of gather here on the North Shore of Oahu. And we just became really good friends. We had a kind of a tight knit group of people, and we all pushed each other and kind of grew up together. So very, very grateful for that experience for sure. And we're still really good friends to this day.
It's pretty remarkable. I remember you spoke about how you're all still friends and that, you have this like direct, messaging back and forth sometimes with all of you. And one of the things that I got out of that documentary was that because you all were in it together, you each did push each other forward, encourage each other, have each other's back. That's something I'm a big advocate of when traders talk about, how isolating it is, how lonely it is. They don't really have anybody to fully understand their losses and their wins, right? They can't fully be transparent with people who don't understand. And one of the things I always say is, you got to have a buddy or at least some sort of a tribe of people who have your back. How did that impact you as a surfer, as you were coming up, having that tribe, having the people, guys in it with you? Did that make a huge difference?
Yeah, for sure. I think it did. It was great to have a really strong, small group of my peers that we were all sort of on the same page. We were all sort of the same age and, for the most part, similar ability levels and similar goals. So we all sort of had our eyes on the same prize. And so we would do it all together. We would stay together and surf together, train together. And so it was really cool. So, it was great. And then we were really lucky as well to have a couple mentors. We had a couple of guys that were a little bit older than us, 4 or 5 years older than us. So they were sort of at the next level already. And it was really good because those guys kind of took us under their wing. And so when we had our victories or our, painful experiences, those guys were there to try to, help us navigate the situation.
Yeah. Yeah. When I believe you said it was 2004 when you started to trade?
Yeah. So I guess I should probably go through a little bit of my history with that.
Please.
Uh, I guess it's probably pretty interesting with everybody that comes on your show as far as like what their first experience was and, you know, how they got into it.
Yes.
So I guess long story short, I had a really good friend whose dad owned a bunch of coffee retail stores, and I didn't drink coffee at the time at all. And he told me, he goes, "Yeah, my dad told me that if I had any money at all, that I should put it into Starbucks stock, you know, because he did, you know, this guy he actually owned the Coffee Bean and Tea Leaf. Was his father started that company, and I didn't know anything about coffee, but I just was like, yeah, that sounds like a good idea. I was pretty young at the time. This is like in 2002. And so I ended up buying Starbucks stock, and that started doing really well. You know, that was kind of like at the bottom of that really horrible bear market from 2000 to 2002. And so the timing was good. And obviously the Starbucks was onto something huge. I thought the story was done at that point. Starbucks seemed like it was already everywhere to me. So from an investing standpoint, to me, it seemed like the story had already been told, but I was totally wrong. And so I put my money there, and it started doing really well. And then I got really into it because I was like, wow, this is amazing. Just sort of watching my investment grow over time. And so the next summer, I was traveling full time on the tour, competing as a surfer at this time. And I would always travel with like six or eight of my buddies. And so wherever we'd go, we would like rent a couple houses, rent a couple cars, and do it all together. Yeah. And at the time, we were all obsessed with music, and we would travel with backpacks full of CDs. And so our whole music collection was filled in our backpacks traveling. So we'd all have like a 20-pound backpack. And then like that little click wheel iPod came out, the very first generation of the Apple iPod. And I remember because we all bought them in California the first week they came out. And about a week later, we all went to France together. And within like 3 days, I had all my friends' libraries of music on my iPod. Yeah. And I was so blown away. It like changed everything for me. And I couldn't believe it. I didn't know what to do with all my CDs. I had like 300 CDs that I would travel with that weighed like 30 pounds. And I was like, hundreds of millions of people are going to experience this in the next few weeks. So yeah, sorry about the long story, but it kind of sets the scene because, I bought Apple in the summer of 2003, which was like crazy timing, right? And so I had Starbucks that was like ripping to the upside, and I had Apple what was ripping to the upside. And I was just tripping. I couldn't believe it was real. And all of a sudden, both my stocks were up like 300 or 400%. And I was so baffled that I just was like, there's no way it's this easy. There's no way. It can't be. And so then I started going down the crazy rabbit hole. I went to Borders and started looking at all the books like on investing and trading. And then I read a bunch of like Warren Buffett type books. And then I started just like trying to consume all of the stock market kind of books that I possibly could, and kind of like figuring out, what sort of like methodology or what type of personality type I had for investing. I was really into like growth investing and like stories and like the macro picture and what it was going to be like 3 to 5 years from now, and like making bets like based on that. And so I guess long story short, one of the books I came across was How to Make Money in Stocks by Bill O'Neill. And that book totally changed my life. That was like a crazy aha moment for me. I ended up reading that book about 10 times in a row. And then I started going to...
What was the aha it brought you to?
Well, it's, that Bill O'Neill, I don't know if you are really familiar with him, but he's in his 70s or early 80s now. He's been investing since the late 50s, and he developed a system called the CANSLIM system, CANSLIM, and it's like a growth investing kind of a trend following system. That really resonated with me just because it was like like a fundamentals and technical type of system where, you know, like the stocks that I was looking at, all of a sudden I was able to look at that through a lens and go, okay, here's all the boxes these stocks need to tick. They need to have these types of, you know, earnings, sales, profit margins, management, return on equity, all these different fundamental traits of like past huge stock winners. And then it also had to set up like in a technical picture with relative strength and a buy point and all that stuff. So that was a really cool educational like period for me to really try to understand that and see how to buy stocks within this system. You know, even though the stocks that I was already interested in kind of fit the system anyway.
Yeah, that's what I'm fascinated by is it for you to have stumbled into your first two, you know, trades, basically became the same pattern that you stayed with. That's somewhat unusual. Like, it's pretty amazing.
Yeah, I was really lucky. I kind of found a system that was really like focused on the kind of stocks that I'm into anyway.
Yeah.
You know, stuff that has a lot of like liquidity and institutional sponsorship type of stocks. I don't ever buy like I wasn't interested in penny stocks. I wasn't interested in anything that didn't have earnings or at least really strong sales revenue growth. And so yeah, it was a great fit for me. And then so that was in about 2004. I started studying that system, and then I went to like they have different like seminars. I would fly to California for their seminars, and so I went to like 3 or 4 of those and went to like their master trader program, and so yeah, I got more and more into it, and then I started having more success and some tough periods as well. But it's just been a great the last, what has it been, like 16, 17 years now. It's been a lot of fun and, you know, very educational and super humbling. And yeah, I really enjoy it.
What do you see? You know, I talk a lot and think surfing is a great metaphor. And I'm talking regular surfing, not even big wave surfing. But I've always seen that as a great metaphor for how you have to be present in the moment. And you can't be too far ahead of yourself, and you can't be in the past. Do you find, or did you find, as you started to trade, that your experience as a surfer served you?
Definitely. There's so many different things about. There's so many different things that kind of translate perfectly for trading for me personally. Especially with big waves. Like, I'm really focused on big wave surfing. I love surfing all types of waves, all sizes of waves, but my specialty, I would say, or my strength is big wave surfing. And a lot of big wave surfing is like your mindset and like your emotional stability under pressure. And, you know, just being able to keep your shit together when the going gets tough. Yeah. And that's definitely trading, right? Like, you're under fire. It feels like you're in a war zone a lot of times. And if you lose it or you panic or whatever it is, where, you know, you don't trade your plan, then like you're off your game. And then you start, you know, shifting styles or shifting methods. And so there's a lot of really great lessons for me in surfing. I mean, with big wave surfing, the number one thing is patience, you know, having the patience to wait for the right situation, the right conditions. You know, it's like, so for example, with surfing, like the best big wave in the world is Jaws, and it's on Maui. The name of the surf break is called Jaws, and it's on the north side of Maui. And it's basically terrible, and you can't surf it like 99% of the time. So maybe 2 to 3 days a year, the waves get really, really good there. And about 15 days a year, the waves are big and you can surf it, but it's not optimum. And you can go out there and surf really big waves and experience really big waves, but the risks are so high and the rewards are so low, and there's a lot of danger element, and you can really like ruin your year, like blow your knee out or drown, and it's not just like the reward is not worth the risk. And so that's sort of the way I look at stocks, and that's sort of the way I look at the markets, is trying to like manage the risk. And I've been doing that in surfing like my whole life. So that I think is probably the biggest thing, like having the patience to wait for the right conditions, essentially. Like there's so many times where I've gone, okay, there's a really big swell. I'm going to pack up all my big boards and get all my gear ready. And I'm going to leave my family and fly over to Maui. And I'm going to surf this big swell at Jaws. And I'll hire, water safety and have all my boards ready and have all my food ready and my energy stuff ready and have my bodies ready and my emotional state and my mindset's ready. And I'll get out there in the morning and the conditions just aren't what I want and aren't what I need. And a lot of guys will paddle out into the lineup and go surfing because they spent all this money to get there. They have all these goals in mind. They want to achieve this and that. And they're not looking at it from like a risk reward perspective. They're looking at it like, this is my moment. I got to do it. The waves are big. And if you approach a stock market like that, you're going to be over trading. You're going to be in there every single day trying to be a hero. And so for me with surfing with big waves, I just sit on the sidelines and just be like, hey, these are not the right conditions for me. These are not the right conditions for my mindset and my surfing style. I'm going to wait for everything to line up perfectly. And then I'm going to take a huge swing at it. I'm going to really, really try to time my surfing session in the best conditions possible that suit me as a surfer. And then when those conditions really line up, I'm going to like really, really focus and completely commit. And if I had that mindset with trading more often, I would be a much better trader.
That's funny.
Well, do you find it as risky? Like, do you like risk? I mean, you can't be a big wave surfer without having some sort of, nourishment from risk. So how do you mitigate it then in your trading? What do you lean on to keep you conscious of, I have to keep my risk minimum here?
I mean, I just don't like losing money at all. I really hate it. And so every time I have a losing trade or a series of losing trades, one strength of mine is I don't revenge trade. That's something that I've learned to not do. And when I have a string of losing trades, or if I'm not, if I'm underperforming or something's just off, I'll either scale back completely to cash, or I'll make my position size a whole lot smaller and just trade really, really small until things start gaining traction. Then I'll ramp back up. And so I guess that's probably the biggest thing is managing my risk in a way where if things aren't working out, it's either something wrong with my trading or the market conditions. And I'm really fortunate. I'm on a couple of platforms with some other traders that are really good and much more experienced and probably a whole lot more successful than I am. So I do have, it's almost like a peer group. It's almost like having support where I see the market not only through my own eyes, but I can kind of watch in real time how people with a whole lot more experience are interpreting what's happening.
Yeah. And the patience, I just want to talk about that for a minute because, there are traders, we get sophisticated traders listening to us. We get some newbies, and just even a trader the other day, to a post wrote me and said, I've been at this full time for 3 years and I just can't believe it's taking us me so long. And I was like, 3 years is not that long. So what about you? How long did it take you? I mean, you got lucky right out of the gate with Starbucks and Apple, but then going forward, did you struggle with that? It's been 2 or 3 years. I can't believe I'm not excellent at this.
I'm still struggling with that now. And it's been 16 or 17 years. I should be, in my mind, I should be a whole lot better at this than I am. But I absolutely am obsessed with it. I love the studying. I love the research. I love doing deep dives on companies and management and products and services. And it's just for me, it's kind of like a treasure hunt to see if I can uncover something that I feel a lot of conviction about and see whether I'm right in the long term. And I do have a knack for identifying big winning companies.
Mm.
I just don't have a knack for sitting tight in them.
Yeah.
You know what I mean? If I just limited my trading to like one idea per 6 months and went, okay, I'm gonna allocate a portion of my portfolio to this one idea. I'm limited to only that one trade once every 6 months. I would probably absolutely kill it. I just get really freaked out when the market has unstable, unstable couple of weeks or even a few horrible days in a row on monstrous volume. To me, I get really sketched because I'm trying to manage my risk so tightly that a lot of times I get shaken out right near the lows of the indexes low. When they like right before they bounce, I get shaken out of everything thinking this is the start of something more serious, and I'm sure a lot of the people like listening to that can totally relate to that. Because in this market, the last couple of years, like buying the dip or, waiting for the market to look really scary and terrible for like a few weeks or even like a few days, that's the time to buy, right? And that's just really, that goes kind of against, for me, I'm like a trend follower, right? So as soon as the trend breaks, I'm sort of out. And so it's been tough for sure.
Yeah. Lucas, did you could ask something before?
Yeah, a couple things. I mean, I feel like you and I have a pretty similar trading and / investing experience. Like I started working at Apple and they gave me some stock. So I was like, I got to figure out what this is and how this works. That was back in like around 2010 or so. And then I was like, read like Benjamin Graham books and then found like how to make money in stocks. So that's basically how I trade now. And I'm wondering, what's your like preferred time frames and like how long are you holding generally? Is it more years, positions, or just swing trading for a few days, weeks?
Yeah, so I would say I'm more of a position trader. Like for example, I guess maybe I'll share my screen and just go over a couple recent trades that I've done.
That'd be fun. Yeah.
Awesome.
Yeah, so I tried to buy NVDA, which I just think is a great company. They have, you can see down at the very bottom. Here, I'm going to move you guys again. Sorry. You can see down at the very bottom these boxes. This is a program called MarketSmith, and it's really good because it has a lot of fundamental data as well as technicals. And you can see right here the after-tax margins. You can see how strong they are all the way across the board right here, quarter after quarter. You can see the sales super, super strong, double digit. You can see the earnings super, super strong. They have great products. I mean, they're well positioned for everything in the metaverse and machine learning and, everything with EVs and, basically anything you're trying to build for the future, you're going to be using these people's products.
Wow.
So I've been in this stock over the last few years quite a lot. I bought it right here. Can you see my cursor?
Yeah.
So like you can see this thing was making a really big base throughout this whole bit. I think I tried it here, got stopped out. I tried it here. I rode this up a bit and then I sold it right here. Mm-hmm. And then this made a really nice little cup and handle. And I bought it right down here in the bottom of the handle. Mm-hmm. I thought I was timing it perfectly. Came down, I got shaken out. A lot of times I'll use the 50-day moving average and buy right around the 50-day moving average, which is this red line on the chart is the 50-day moving average line. So I tried it here. I think I got shaken out right around here, and then it's set up right here. This is probably the most important part of the chart. Yeah. Is right here. There's these 3 red days. Mm-hmm. Can you see those?
Yeah, we can.
And if you go down to the bottom right here, you can see really nice high volume right here. And then these 3 days right here, the volume is like insanely dry. Yeah. You see that?
Yeah.
And so on these 3 days, it was consolidating right underneath that red line, which is the 50-day moving average. So just as it broke that 50-day moving average and that short-term high right there, I bought the stock on this day right here, which is 10.14.
Yeah.
And then I wrote it up, and then I just sold it this morning.
Wow.
Nice.
And so that was an 8-week hold for me. I'd say that's pretty typical. I try to hold stocks for 8 weeks. In How to Make Money in Stocks, a lot of times they say if a stock goes up 20% or more in 3 weeks or less, you should try to hold at least 8 weeks, because that's a trait of many of the biggest winning stocks in history. A lot of times they'll go up 20% or more in 3 weeks or less. And so a lot of times I'll try, as long as the market is decent, I'll try to give a stock the benefit of the doubt and try to hold it for 8 weeks as long as it doesn't get in trouble. And so I sold that today. That was an 8-week hold. I also sold Apple today. My chart for some reason is not really showing it, but so this is a cup and handle on the daily chart right here. Do you have any questions about my charts, by the way? Is it confusing?
Not yet for me. Kim, do you have any questions?
Nope.
Yeah. So this is a daily chart of Apple, and once again, you can see the sales and earnings down here, like really, really consistent sales and earnings growth, even with, you know, the law of large numbers that Apple's dealing with. You can see they have incredible fundamentals. And so I was watching this, and I wasn't really interested in Apple. They're so big that it doesn't seem possible to get a really big move out of them anymore. But, you know, obviously history has proven me wrong plenty of times. And so this was creating a really nice little cup and handle. Yeah. And this started getting on my radar right about here. And then during this period right here, these like few weeks, the market was really, really weak, and a lot of stocks were breaking down. A lot of technology stocks, a lot of growth stocks, even like a lot of the steels and oil stocks that have been leading, they were all breaking down right here, and Apple didn't. So it was showing pretty impressive relative strength. And so I bought Apple right here on this day, which was 11/17. And it came up, had a nice little pullback, and then it was so strong the last couple of days in a weak market that I just went, you know what, I'm just gonna take this winning trade, because I've had a bunch of like losing trades as well lately. And so these couple winners I was really happy with, and they helped me a lot just to kind of stay green in this really this is, I mean, if you're a growth stock investor in the last few weeks, it's been really, really tough. The last few months, I should say.
Yeah. Yeah. Awesome.
Yeah.
That's great. It's a great platform, what you're using. I really like how clean it is.
It's great. And then I'll just click onto the weekly so you can see the fundamental data. It's a great service. This is MarketSmith. Yeah. So right here, you can see this is a sales growth, and it shows it like all stacked up like quarter by quarter. So it's really simple to read. And here's the earnings growth. You can see the number of funds. This is really interesting to me. You can see the number of institutions that own the stock quarter over quarter.
Interesting.
And so you can see like Airbnb is a company that I really like. I think is a really great idea for the next 3 to 5 years. This is a stock I've been trying to hold, and it's been really difficult. But you can see the number of funds has been interesting. See, just in December 2020, there was only 600 funds, and then 700, 900, 1,000. So you can see that fund growth quarter over quarter is really, really strong. And that's something I definitely look for as far as from part of the fundamental story. I'm always looking for the companies that the large institutions are starting to buy.
Yeah.
Makes sense. Is that something that you start to pick up on your own, that those institutions was a good flag for you?
No, that is part of the CANSLIM system. So in that CANSLIM system that William O'Neill developed, so it's CANSLIM, and so the I in CANSLIM is institutions, and so you really want to see the institutional sponsorship. So I'm always looking for companies that have a lot of liquidity, have at least probably I'd say like 200 to 300 institutions owning them. There's like a kind of a sweet spot between I would say like between like 200 institutions and 1,500 institutions. That's like during that time, a lot of times you see like kind of like this institutional adoption, and a lot of times you see once a company goes from like 100 to 150 to 200, then you see like this trend in institutional sponsorship starting to grow. And a lot of times, I remember I bought this is a really good example, I guess, and for me a huge like learning opportunity. In 2013, I think it was, I bought Facebook, and Facebook was a stock that had so much hype for the IPO that everybody was talking about it. Everyone was trying to buy it. Everybody was talking about how rich they were going to get buying Facebook stock before the IPO. And if you remember in 2012 when it IPO'd, they flopped like horribly. Like the stock was down like 50% in a few months. But it was a great growth story, and they had incredible strong revenue growth. And at the time they couldn't figure out mobile. And in one quarter, they had this earnings call, this big earnings report, where they basically, in one quarter, they figured out mobile for the first time. And the stock gapped up the next day like 25%. And the volume on that day was over 700% above its daily average volume. So you get this institutional quality stock with all these funds in it, and all of a sudden on one day, 700% more volume than its daily average trading volume. And I bought that gap up. I bought a huge position that day on that gap up. And it was two things. It was them figuring out mobile. It was the stock responding with monstrous volume. These institutions had to have the stock all of a sudden, because there were so many doubters. There were so many people saying, hey, Facebook can't figure out mobile. They don't have a way to monetize their platform on mobile. And all of a sudden they had like this clear proof that they did. And not only that, but you saw the institutions piling in because of the volume.
Yeah.
And so at the time, I remember there was only about 600 funds that owned Facebook.
Wow.
And at the same time, there was 4,000 funds that owned Apple and about 3,000 funds that owned Google. And so I was just doing the math. I'm like, man, this story is so new. It's so early, because these funds have to get in. This monster liquid name with this huge growth runway, and there's only 600 funds that own it. That's crazy. And so that gave me a ton of conviction to hold. And I like marked up my chart when I bought it. Like I always do like these chart markups where I'm like, I put all of these, basically things to build my own conviction. Like here's the sales, here's the earnings, the funds are accelerating. They have crazy revenue growth. They have crazy return on equity. Here's all their products. And here's what I think that they're, I try to build my conviction with all like the fundamental data and what I'm reading into that. And then I try to basically say, hey, like you cannot sell this stock within 6 months as long as it's in the green, And so with Facebook, I did okay I held it about 6 months or 8 months. And I think the stock like doubled or something like that. So that was a big winner for me. And so now a lot of times I look at stocks that are kind of newer, like an Airbnb or like a Snow or like a Palantir, which has been doing bad lately. But I look at those kind of like institutional quality liquids, like big liquid growth stocks from a perspective where how many funds own them now and how many funds are likely to own them in the future.
Yeah. And just curious, before when you were talking about Facebook, you said, I did okay. What is the reason you say okay? Like it sounded just great, not okay. So what's that? There's some, frustration there. What is that?
It's my inability to hold for the longer term move.
Yeah.
I struggle with that. A lot of times I'm like, hey, like I'll write on my chart right there. I'll be like, hey, you got to hold this at least 6 months or at least 12 months, because I'm so sure, I'm absolutely sure, as long as the market doesn't get into like significant trouble and as long as I have a profit cushion, I should just hold it. And that's a lot easier said than done for me. And so when I hold something for 6 to 8 months, that's huge. A lot of times if I hold something for 8 weeks or 12 weeks, that's a pretty long hold for me. Yeah. But in the past, I've done pretty well holding. Like my longest holds were like Facebook, Apple, and Amazon. So when I have conviction in a big liquid leader like that, a big solid growth stock with really strong institutional support, with great earnings, great sales, great return on equity, and great products that I believe in. Those are the things that I'm trying to hold for the longer term. I get disappointed in myself because once I do have a big gain, I start going, oh man, I sort of want to protect myself. And sort of looking back now, I'm trying to learn a little bit of a different strategy of, instead of selling the whole thing, like to peel off pieces as it's going up, once it's up a certain amount, or once I am able to hold 6 months, maybe I sell 25% or I sell half and try and keep half or keep a quarter over time.
Yeah. And I want to say though, you're a man whose whole life has been about mitigating risk. So I would imagine that that's your natural disposition. Like that's part of why you're still here. You're still alive because you didn't take that crazy wave in Portugal that you flew in for. Like that mitigating risk has saved you a lot of times.
Oh yeah, saved me huge. And you know, the all the trades I'm talking about are my winners, right? And
Yeah.
and like I keep pretty close track of my win rate and my average loss and my average gain. Probably every 6 months I kind of like redo those numbers. So I'm very like familiar with my strengths and weaknesses and how I'm trading relative to the market.
Yep.
And you know, I'm like at like this year in 2021, I think I'm around my win rate is like 30%. So like out of 10 trades, I'm wrong 7. And so if I'm wrong big, I'm toast. And so my average loss is about 4%. So I try to keep my average loss under 5%. A lot of times it's about 3%.
Wow.
And then my average gain is more like 15%. So I try to do like a sort of like a 3-to-1. That's my goal. That way I can sort of keep myself out of trouble. And then every now and then I'll have like when I sold NVIDIA today, I think I was up like 50% or 51%. Yeah. And then with Apple, I forget what it was. It was like 15, 16%, something like that. And so that kind of offsets a lot of the little losses I've had recently that have been really annoying.
Yeah. But listeners, it's December 1st, 2021. If you're trying to look at like what he's talking about and what today is,
yeah.
What do you feel helped you determine? Do you feel once you saw O'Neill's book, you were just in, or have you since looked at other styles of trading to make sure, you know, at least in the beginning, this was the fit for you? What do you remember about that and saw his style of advocacy? Did it just, that was it? You were done?
That's a really good question. I think once I read the book, I became, once I read the book once, I really didn't understand all of it, but I understood certain concepts and certain chapters. And so I read the book again, and then I read the book again, and then I read the book again. And then I went to the first seminar and I listened to some of the presenters speak and have their presentations about, past historical winners. And a lot of them were the stocks that I was really interested in. Some of the stocks that I was already in, like Apple and Starbucks, and to see how these guys held it, like according to their rules, how they bought the stocks, held the stocks, and sold the stocks according to their rules was fascinating to me, and how they were able to do it time and time again with all these different like market conditions and market cycles to like identify like the leading growth stocks and how they analyzed them, how they bought them, how they held them according to their rules, and then how they had rules to sell them. That was so cool to me. Yeah. And it took me a very, very long time to consistently figure that out and to follow the rules. The hardest one being to cut your losses quickly and to make sure your losses don't get out of hand. That's probably the hardest one, because our ego is always messing with us, right? When we take a loss, we're accepting that we were wrong. And that is so tough for human nature with our egos. It makes it really hard to be like, I was wrong about this. And that was really hard for me at first, because admitting I was wrong was tough. And now I'm so happy to admit that I'm wrong. I just admit I'm wrong right away. Hey, I was wrong about this. I'm out.
You said so long. What is that time frame, if you're comfortable sharing? You said it took you so long. How long?
Well, it took me years for sure to really follow that rule every time. And so my risk tolerance was higher then as well. Like when I first started out, like Bill O'Neill, the original books, they're pretty set up to be kind of, even though it's kind of a complex system, it's pretty simple. Like you're supposed to cut your losses. You're supposed to buy at the exact buy point, and that's all explained, right? So you identify a clear buy point of where you should buy. You shouldn't chase over a certain percentage above that. And then if you're wrong, you should sell 6 to 8% at a loss. Like say you're wrong, it goes down 6%, 7%, 8%, you should be out. No questions asked. And as I've gotten more experienced with this, I'm much better at identifying really precise buy points. And so my risk tolerance has gotten smaller and smaller over time. And then also with Bill O'Neill's books, there's another guy. His name is Mark Minervini. I don't know if you guys know him, but he's also wrote a series of really amazing books, and they're sort of built on top of O'Neill's system. So Bill O'Neill wrote these incredible books, and then there's been all these like guys coming up studying under Bill O'Neill. So Mark Minervini was a guy like me who started reading Bill's books, going to all his seminars, but he's kind of adapted Bill's system into his own. Very, very similar, but more precise, I would say. More granular, more super, super specific entry points, and the risk tolerance is much smaller. So even though they're very similar system, I would say I haven't system drifted at all, but I'm definitely more of like a Mark Minervini type trader, maybe not timeline wise, as far as like, he's more of a swing trader. Like he'll hold things from like 3 days, 5 days, 10 days, where I'm trying to hold things for like 8 weeks or 12 weeks or 6 months. So I'm more of like an intermediate term trader, but I use those entry points that Mark Minervini has in his books that are much more super, super precise, like to like the 1%. You're not supposed to chase past 1%, which is that risk tolerance is so tight.
Yeah. What do you feel, let's say as a person who's just beginning and they're not sure yet what style they're going to do? How would you advise them to investigate what suits them? You said early too about you felt his style, O'Neill felt matched your personality. So what would your advice be to somebody who's trying to determine what kind of trader they're going to be?
Oh man, that's so tough. That's so tough. I would say probably to try and do like what we did, like read a lot and like study what people do, and whether when you look at investing from a lens of like, hey, like, am I a value investor? Like, can I really, do I grasp like that there's been a recent bear market and Coca-Cola has been beat up and it's down 40 or 50% off its highs? Like, does that make sense to me that, hey, this thing is crazy cheap and I have the risk tolerance and the stomach for sitting through all this volatility until Coca-Cola gets back to its highs, or something like that, versus am I a growth investor? Can I identify a growth story and amazing products and services like that? That's like when I go into a store or a retail store, like take Zara. Are you guys familiar with that brand, Zara?
Yeah.
So I was traveling with my wife probably in about, I don't know, 2005 maybe. We were in England for a surf contest, and then we went to France for a surf contest, and then we went to Spain and then Portugal. And when we were in England, we were in London for a few days on vacation, my wife and I, and she loves clothes like every other girl on earth. And she went into this store called Zara, and it was like this all glass, super modern, 3 stories, and the place was packed. I mean, packed, massive line to buy stuff. Everyone coming out of there had like 5 bags. And I was like, these people are absolutely crushing it. And so then she bought some other stuff in London, and then we went to France and we went to Paris, and there was a couple Zara stores under construction, and the ones that were already there were full. And then we went to Spain, same exact thing. And I never heard of the company before. And so I immediately called my financial advisor at Morgan Stanley and said, dude, I need to know how to buy this stock, Zara stock. And he's like, it's not traded on the American Stock Exchange, but it's on the Spanish Stock Exchange. And so I ended up buying it through Morgan Stanley, and just no chart, no nothing. It was just a fundamental story of like, this thing is going to kill it. And I ended up I ended up holding Zara for about 5 years, and it did really well. It was like a 600 or 700% winner. And so that stuff like really resonates with me, where I'm like, hey, this, like, people are really catching on to this. This is a trend that's just beginning. This product or this service or this restaurant or this retail, company this is happening. And I would say, not from like an ego perspective, but just from like my job and traveling a lot, I'm like an early adopter, and I get to see things in different parts of the world probably earlier than other people. And so that's an advantage I have, and I want to try and take advantage of that. I feel like I'm in a position to see things through a little bit of a different lens. Mm-hmm. And I would say that's once you identify what your advantage is, you really want to use it.
Yeah, it sounds to me like it's a combination of a lifestyle that somebody has, a mindset, a perspective, and their temperament. And if you are conscious of each of them, then you're going to maybe just find yourself gravitating towards a certain style.
For sure. Yeah. I mean, and it's pretty interesting. I'm part of a group of friends that are we have a trading group. It's called Losers Take Profits. And it's just my buddies, and it's a bunch of people in the surf world. Like there's like 4 other pro surfers, 2 filmers. There's like maybe like 6 other pro surfers, 4 filmers. And there's like multiple like world champion type surfers in it. And they're just a bunch of close friends. And some of us are like, we've been trading for 2 decades, and then just a couple of us. And then sort of the rest of the group is trying to learn about trading and try to figure out, what their style is like. And we just talk a bunch of trash on our text thread and talk about stocks. And then it's kind of a shit talking text thread. And then we also, it's a competition. So at the end of each trading month, we have to screenshot our month to date and year to date earnings or loss, our performance. And then we have to post it on our thread. And then we have a chart with all of our performance, our performance over time. And then at the end of the year, we decide on the last trading day of the year for our group. And then the loser has to take everybody out to dinner at a really killer sushi place. And then also has to get custom pajamas with the winner's face all over them. And it's funny because I think there's 11 of us in our group now. And everybody has a different style. Everybody has a different risk tolerance. Like the guy who won last year, he went all in on Tesla. He's like a crazy Tesla person. And he's a surf filmer. So he takes photographs and video of surfing. He's awesome. His name is Ryan Miller. And he is a crazy Tesla bull in his own account. And then in our little competition account, he went all in on Tesla. And he's like, I believe in Tesla, so I'm going to just buy Tesla. And then I'm going to see what other trades come up during the year. And he ended up buying it January 1st on 2020 and held it throughout the whole year because that was the best trade of the year. So he was up almost 800% and he won our competition last year. And then this year has been really interesting. And then, so anyway, I guess the reason I'm bringing it up is just because the different personalities is fascinating. Like he has like my buddy Ryan he also has big losing trades as well, but he has like, I'm not kidding. He has like 5,000 or 6,000% winners. Like I think his Apple position's like up 8,000%. He has over 1,000% winners in like PayPal, Apple, Amazon, Google, I think, Facebook, and then he has some losing trades as well. But he's interesting because he's been in the game for a very long time. He has an iron stomach for bear markets. He has iron stomach for market corrections. Nothing will get him out of his positions. So he's the opposite of me. He's not a trend follower. He's more like big picture macro investor of like, hey, this company's going to kill it over the next 10 years and I'm not selling no matter what. Wow. And then we have other guys who like do 4,000 trades a year and they're like day traders and really crazy and like, this is my big idea. Oh, maybe it's not. This is my big idea. And so it's really fun to be part of that group because you see everybody's stories and everybody's learning curve. And we're basically trying to help each other learn over time is the goal.
Yeah. Do you see their temperaments or their personalities because you know them in other settings to match up to the way they're trading?
Most definitely. Yeah. It's funny because the guys who are the most patient in their trading accounts and have much longer time horizons with holding periods are also the guys who are the most calm and the most mellow, personality type, probably the least amount of ADHD. And then the guys who are like spazzes and really like have tons of energy and probably a lot more kind of frantic in their everyday life. They do a lot more trading and they're looking for more excitement, right? They're not so much looking for long-term success. I think a lot of them, it's funny. I've heard this a lot and they say that everybody gets what they want out of the market. And to a certain point, I think that can be really, really true because a lot of people are honestly looking for excitement and looking for fun.
For sure.
And whether that is on the way up or on the way down, that excitement is exhilarating. And I don't think I can so much relate to that, but it's interesting to see in my friend group for sure.
Yeah. I think that sense of being, I'm always advocating, be self-aware. The more self-aware you are as a trader, whether you're starting or already, been doing it for 20 years, if you don't know yourself, you're not going to be able to handle the inevitable, unexpected developments. And it's you against you, ultimately, as a trader.
Oh, yeah.
And that's why I feel being clear on your temperament or your style, it just is going to mitigate a bunch of pain and suffering later. Because if you are somebody who's an adrenaline junkie, which is, it's funny to say that because you are not an adrenaline junkie on one hand because of your ability to mitigate risk, and yet you're a big wave surfer. So I know that sounds a little incongruent, but it just feels like people have to identify for themselves. What's their temperament? Is this going to suit me? But it's interesting too, Shane, because I'm also seeing a bit of a, you're willing to let go of a wave when it's not perfect. And yet I'm noticing that you're letting go of certain things in your trading, right? You're not having that iron stomach. So do you see your pattern changes based on, is it the loss of the money or is there something else there?
As far as like letting them go?
Yeah. You said like, I wish I stayed in some of those longer, which is why you weren't overly proud of that win.
I think for me, it's more managing risk. I think that's the thing that's kept me out of trouble over time. That's the reason I've never blown up my account. Yeah. It's funny because I study a lot of really good traders and I pay attention to a lot of them, and I watch a ton of like long form YouTube interviews and stuff with great traders. And a lot of the guys that I really admire blew up their trading accounts when they started at multiple times. There's the guy, Mark Minervini, that I study and read his books. He blew up his trading account, I think, two or three times, and he wasn't successful at all in trading for 7 years. Wow. And now he's probably one of the most successful stock traders in history. He's winning this year's U.S. Investing Championship.
Wow. He's
up 350% for the year to date. And the guy in second place, I think, is up about 100%. So he has triple the next best trader in that competition. And he started off for 7 years, wasn't successful at all, and blew up his trading account 3 different times. There's a guy named Jim Ropel that I really admire. He's an incredible trader. He studied under Bill O'Neill, and now he's a hedge fund manager, but he trades the CANSLIM system, and he always has. And he blew up his account a couple different times, and now he's an incredible trader. He's so incredible, so good. So it's just interesting. So for me, I didn't want to be another stat like that. I really didn't think that my psychology could survive blowing up my account. And I really want to protect my psychology. That's probably my biggest worry, is keeping my mindset intact, not losing my confidence. And over time, I'm not here to try and triple my account in the next 3 months. I'm trying to slowly be successful over time. I'm fine if it takes 10 years. I'm fine if it takes 5, 10, 15 years, as long as that growth is somewhat consistent and I minimize my drawdowns.
That almost feels like one of your secret sauces, right? Because you're not, I think a lot of traders come to it with a gun. They hold the gun to their own head or to the market's head and say, I have to succeed in a very short amount of time. But I'm not hearing that with you. You're in this for the long haul, and you want to be patient, waiting for that. And maybe that patience too, you've got that patience from waiting for those big waves, that now you're just like, that's part of it's going to cost me. it's going to cause my patients to wait it out.
Yeah, I'm still trying to learn the lessons that I've already learned in surfing. So in my trading, I'm really trying to learn those lessons that took me decades in surfing to learn. Now as a surfer, I'm incredibly patient, incredibly picky. I'm willing to wait for the right swell, the right day, the right wave. I could wait all year for the right wave. And then it's super, super worth it because I'm looking for the kind of wave that's going to change my life, the kind of wave that is going to, be in the front of my memory for the next few decades.
Mm-hmm.
And with trade, I'm waiting for those kind of trades. That's really the goal. That's what I want to do. I want to wait for the kind of trade that's going to be a life changer. And so those are the lessons that I'm trying to learn and trying to get better at. And over time, I'm hoping to become a better and better trader. I've had a ton of losses, tons and tons of trades that didn't work out, and I'm okay with that. And during my tough periods, as long as I can minimize my drawdowns and not get myself into too much trouble, when the market conditions are right for my trading style, I know that I will outperform. Whether it's whether the market rallies for a year or 6 weeks, I know I can make up a lot of ground in those periods of time, as long as I don't get myself into too much trouble when the market's bad.
Yeah. Yeah. The best advice to a sophisticated trader who's listening to you, what would that be?
Pardon me?
What would your best advice be to a more sophisticated trader who's listening to us?
I probably don't have any advice for any sophisticated traders out there. I'm sure they're a lot more disciplined and better than me at this. But I think any sophisticated trader would already know that risk management is probably the biggest factor in all this. Having a game plan, sticking to it, keeping your losses small for anybody who's trading the type of strategy that I am. And then, when you're right, trying to sit with your winners. I mean, I had a trade last year that was like a life-changing trade for myself.
Wow. What was it?
What's that?
What was it?
If you want, I can pull up the chart.
Yeah, pull it up.
Yeah, let's look at
it. So don't mistake these charts or these trades for consistent. These aren't my typical trades, and this one that I'll share is extremely non-typical. Okay. So I'm also a big Bitcoiner.
Mm-hmm.
I'm really, really into Bitcoin. And this company, RIOT Blockchain, they're a Bitcoin mining company.
Yeah.
So I don't know how much you know about Bitcoin, but they basically are a public company that run a ton of mining operations that basically they bring Bitcoin onto into the blockchain system. Anyway, this is a really cool company. And so because I already own Bitcoin, I was looking for added exposure into Bitcoin, public Bitcoin companies, ones that I could buy like in my retirement account and stuff like that.
Sure.
I'm going to go back in time here, 2020. So,
wow.
So I'm going to go back in time. So if you can see, can you see the chart?
Yeah.
So I don't know if you guys ever trade this setup called a cup and handle.
Yeah. I probably was in this at the same time as you.
Oh, wow. That's cool.
I don't think it did not change my life though. So I'm excited to hear what, because I sold way too early.
So first of all, this stock did not fit my CANSLIM parameters. Mm-hmm. It had no, I don't think it had at the time, I don't think it had any earnings growth. No. I think it had accelerating sales growth. It didn't have much liquidity. And it was a super cheap stock. I never buy anything under $10. But because I was I at the time I was really way far deep down the Bitcoin rabbit hole, and I had been buying Bitcoin for a while. And so I was watching this company, and it set up on the chart perfectly, even though this cup and handle was a little bit of a deep pattern. And there was a lot of volatility. I thought it was worth trying right here as it went above this, like right above this line right here. Can you see that?
Yeah, that 425 or so.
Yeah. So
Yeah.
I put in I remember the night before it broke out, I put in a buy order at 417 and another one at 425. Not exactly sure why those exact numbers, but my theory was if I was right, this thing was really going to explode to the upside because it was such a cheap stock. And because there was so much, you can see down here. Can you see my cursor?
Yeah.
Yep.
Can you see that, Kim?
And definitely.
So do you see these little circles? I just circled, I annotated this chart myself. So you can see all the massive buying. These are all big, all these big blue bars. This is tons of accumulation. So look at the volume down here. It's really low.
Yep.
You can see it's starting to just burst, all this big blue buying. There's almost no red. Look at all these huge, big, this is all buying.
Wow.
And so when it formed this cup and handle, there was very little selling. All of a sudden, everything was below average selling.
Yeah.
And there's all this super dry volume down here in the lows. So I wasn't in the stock yet, but I was just watching it. And then all this volume started bursting in again. Low selling, big buying, low selling, big buying. And then I was like, I'm going to try this. If it breaks above this level, I'm going to try to buy a pretty big position. And if I'm wrong, I'm only going to be wrong 4%. If it goes down 4%, I'm out.
Yep.
So that was my plan. So that was I want to plan my trade and trade my plan, correct?
Yep.
And so my plan was to trade this. If it came through 417 and 426, I was going to have a full position. So I'm going to click through to the next day.
Yeah.
That was the next day.
Yeah.
So the next day it was up 48%. Can you see my cursor up here?
Yes.
So the next day was up 48%. I bought it right there at 417, like right in there. I bought it, and then I bought more at 426. And so on day one, I was up like 48%. And then this is the most important part right here for me. See this? Can you see my cursor?
Yeah.
The volume.
So this thing was up about 1,000% above its daily average volume. So 10x. Wow. So it traded 10x the volume of its daily average volume. And so for me, I was looking for signals that am I right or am I wrong, right? Yep. So I was absolutely right. And when I study historical winners from the past, they have these kind of characteristics where they have these really explosive, super high volume breakouts and close at the top of the range. So it closed at super high. It closed at 91% of its trading range for the day. So almost at the peak high after going up 48% on that day on basically 10x the volume. And so instead of selling, I went, okay, this is telling me that it's early.
Yeah.
That if I'm right with historical precedent and what I've studied, this thing could be huge. And so what I did on this day after the close, I went back, and I actually went back before I bought it. And I'm not going to go back right now in the chart, but in the last time Bitcoin had a huge run, this stock went up, I think about 16 or 1700% in 13 weeks.
Wow. Yeah, it went from it was pennies, and then it went to $17, I think. Yeah.
Yeah, but so from its breakout point that I identified from 2017, a breakout point similar to this, it went up about, I think, 1800% in 13 weeks. So that was my precedent. I'm like, this stock has done it before, it can do it again.
Yep.
And so I'll just click through. So this is what I sat through. I sat through that the next day.
Wow.
But I had a big profit cushion, right? So I had a stop loss set at break even. And then so this thing here, I'm just going to go day by day real quick.
Yep.
And so this is day after day. This is what I was sitting through. So that was a scary day. Then it was up a lot. So I had a stop loss in, and it would be really interesting to Lucas, it would be interesting to see what where you bought and sold it.
Yeah, but I don't remember. I would have to pull it up, but yeah, it was. I bought it on that same day. I remember that day, and then I think I held it until it was the middle of December, I believe, because I remember Bitcoin.
That's so cool that we bought it the same day and held it.
I think a lot of us did because it was. I mean, yeah, you see that volume, it was outrageous, right? Just like you said, it was everything set up perfectly, and you were in before I was in, though. I think I was in later in the day.
Well, and because I bought it so correctly and so precisely and so right, that's what gave me the conviction to be like, hey, I got a huge profit cushion now. Let's see if I can tolerate the volatility that I knew was coming, right?
Yeah.
And so
how did you tolerate that then? If that, especially as your kind of Achilles heel, what do you think you linked into that day that helped you stay there?
I think that was it. I think because I knew that I had bought it exactly right at the buy point, right at the pivot.
Yep.
And because I had a huge profit margin, I think I moved my stop up to break even like halfway through the day.
Yep.
And then I moved my stop up into the money after like 4 or 5 days. And so I knew I was going to make money on the trade. And then I went back also to this same stock in 2017 and looked like bar by bar, day by day, and saw what the volatility looked like when it had its move. And so I said, if I can try and hold this thing for about 13 weeks, that's what it did last time. It had a 13-week run. It went up about 1,800% from its correct buy point previously. So that was my plan. I'm like, hey, as long as this stock doesn't get into too much trouble within 13 weeks, I'm going to try and hold it for 13 weeks. Yeah. So I'm going to switch to the weekly chart. Yeah. So this is that same pattern right here. Can you see my cursor?
Yeah, totally.
So here is 2017. Yeah. So here's the blue line. See this blue line?
Yep.
This is where it broke out and it went up. See right here, look, 1,172%. So this is my annotation right here.
Yeah.
1,172% in 15 weeks. Average volume skyrockets as big money is piling in. So you can see this volume right here.
Totally.
So this is my precedent. I was going, this has done it before, but it had crazy volatility. And so here's where I bought it this week. And so I'll just go bar by bar, but that was my, that was my precedent. So this is weekly. I couldn't believe this was real.
Yeah.
So I scaled, it doesn't have it on the chart right here because for some reason this program is funky with my computer, but I scaled 40% of my position right there on this blue bar.
Wow.
And the reason I did was because it was 13 weeks and that was my plan as long as it didn't get into trouble and because it had gone up 1,700% from my buy point, which is like if I get 100% winner in a year, I'm stoked, right? That's a big winner for me. So 1,700% was so far from my reality, especially when I was willing to risk 4%, right?
Yeah.
But that was it was so crazy. The asymmetric trade was so bananas and out of control. I wish I would have blown out my whole position on that day. Anyway, I blew out the position. A couple of days later, I was completely out of the position. So for me, that was like a life-changing trade. Yeah. I wish there were more to speak of, but this one. So that one for me. Do you have any questions about that trade, Lucas? Or Kim?
Lucas, do you have any?
No, I think it's impressive. Your ability to one, just studying the past, right? Like you looked what it did. You looked exactly at how many weeks it ran. I wish I would have done that in retrospect instead of just getting scared when I was up like 200% and bailing.
Yeah.
But yeah, that's what it takes, right? Like
yeah. That you recognize the chain is a testament to why it's so important to have experience as a trader, because history does repeat itself. The patterns repeat themselves, even if it's infrequently. You spotted it. You were looking at the specifics that gave you a red alert that there was something happening here.
Yeah, and it was honestly a crazy emotional roller coaster. I literally was like, I had my phone off during the day. I wasn't like emailing anybody. I was like in a cocoon. Like I was like so freaked out when that thing was going from like up 200% to 300% to all of a sudden it was up 500% to 1,000%. I'd never had one of those before. And it was a trip. It was a weird, crazy, wild ride. And so now it's really cool because even though I had never had a trade like that before and I haven't had a trade like it since, I know that it's possible, right? I know that is a possible thing. And I've read about traders who have done that time after time, like that guy talked about, Jim Ropel. And for those listening, if you want to get to know Jim Ropel, there's a book called How Legendary Traders Made Millions It's a book by John Boyk, B-O-I-K, and it's amazing. And it's a really neat historical book about some of the best stock traders in history and their trades, their specific trades. It shows charts, shows like why they had so much conviction in some of these trades in the past. And reading about those guys and their trades gave me a ton of, just conviction that someday I would find that was like that big wave that I had been waiting for, right? And it's funny, that last week I held that stock, a really good friend of mine introduced me to Jim Ropel. And so I had a Zoom call like this with Jim Ropel, who I kind of like idolized. And we had like an hour-long talk on Zoom. And I shared my screen with Jim. And I shared that RIOT trade with him. And I was still in it at the time. And I told him, I was like, I scaled 40% of it yesterday. And I was asking him what he thought, because he's been literally, he's had multiple RIOT blockchains in his life, like a lot of them, like probably 10, 15 of them, where he had 1,000% winner, 1,500% winner, 2,000% winner. And it was interesting talking to him because he's had decades in the game and has been really successful for a long, long time trading the exact same system as I have.
What did he say?
Well, he's just said all the right things. Like, hey man, like I think he was really wise to like de-risk the trade. And so it was just interesting. And he was like, man, a trade like that doesn't come by very often. He hadn't had one of those in a while. And so it was interesting talking to him, and he didn't tell me what to do. He just went, you already have the playbook, like from how to make money in stocks. It shows you tons of these historical precedents, how to handle them. He's like, my advice to you is go back to the book, go back to Bill's book. You can see all Bill's big winners and how he handled them and where he sold them. And that's all you need to know.
Wow.
And he's like, but I can tell you this much is that a stock that goes up 1,700% is rare. And to sit through a move like that is rare. And good job. And hopefully you have more of these in the future. And I knew at that point I needed to get rid of the rest of my position.
You have strong stomach, dude.
Yeah.
You have a strong stomach.
I was gonna ask. I do have one question. What what convinced you to even start scaling out? Like when you had that like 40%. What was the reasoning behind 40%, and what was your what convinced you like, okay, I got to take some off?
There's a couple different things. First of all, the position had grown into just an overwhelming percentage of my portfolio. The volatility in the stock was crazy, but the volatility in my personal portfolio was insane. And I had bought that same stock at the same exact time for my daughter and my son in their accounts. And just my volatility in my portfolio was just too great. And so I was like, hey, I need to de-risk this trade. And I've studied what Bill O'Neill calls climax tops. In his book, How to Make Money in Stocks, there's a whole chapter on climax tops. And so a lot of these, huge winning stocks from 1920 and 1930 and 1940 and 1980 and 2000 and 2010, Apple, Google, Syntax, all of the massive winners, big tech growth stock winners of the past, a lot of the time they end their run in what's called a climax top. And so I studied previous climax tops in that book a million times, right? And so as that thing was running, I kept looking for a climax top.
Yep, and totally.
And so a lot of the climax top variables and factors were in that RIOT stock on that day. It had the largest percentage gain, the largest volume. There was a really big volume reversal. And so I scaled 20% early in the day. I scaled another 20% later in the day. And then the next day I sold the rest of my position. And I guess it was both. It was forming what I felt like was a climax top. I had traded my plan of trying to hold it for 13 weeks, which I did.
Yep.
It was up a ridiculous amount. I had so much volatility in my account. And so that's really the reason, I think. And looking back on it, honestly, I'm really surprised that I had the stomach for that volatility. I think a part of it was hubris and maybe too much ego of like, hey, I was right on this thing. I really believe a high conviction in the whole Bitcoin story. And I think that's part of the reason I held it for a long time, was because I have a lot of conviction in the actual Bitcoin story, and like why I own Bitcoin for the long term. And because it was a Bitcoin related mining company, that's part of the reason I was able to stomach a lot of that volatility.
Yeah. It doesn't sound like a lot of hubris, I have to be honest, Shane.
Yeah.
It just sounds like you did your homework, and all those, they all came together at once. And what's the point of learning all that if you're not going to run with it when it shows up?
Yeah, that's right. And I was really lucky, honestly, to have a set of rules in my system.
Yes.
I had a really strong set of rules. So every day, at the end of the day, I would try not to think about it during the day.
Yeah.
But like at the end of the day, I would look at my rules and be like, all my sell rules, like, here's the things I need to be looking for. Is it having these characteristics where I should be selling? And nothing was really triggering that.
Yep.
And it like until the end, you got to give it room to run. You got to let your winners run, right? And when you're right, you got to sit tight. And I knew I was right. I absolutely knew it. Like in my stomach, I knew I was right.
Yeah.
And I just was like, it's stupid of me to not let this thing play out the way all these large winning stocks have in the past. I knew I was in the biggest winner in the market, which is rare. I've never really done that before. And so it was a wild ride, and it was I'd learned a lot of lessons from that trade, even though, they say you learn a lot more lessons from your losers, right? Which is true. I try to analyze those a lot. I do a lot of post analysis of my trades. Usually at least once every 6 months, I'll go through my 10 biggest losers and my 10 biggest winners. And I'll like annotate the charts and try to analyze what I did right, what I did wrong, and try and get better for the future.
But I have to just acknowledge that how you speak about it now and what you endured even emotionally during it felt to me, it sounds like you were constantly measuring yourself up against something that existed outside of yourself. Like you were very, you were double, triple checking yourself. Like, am I following the rules? Am I seeing what I'm seeing? Like, no hubris. That's to me why you probably succeeded at it, because I just don't hear any hubris. And that to me is like the most important quality to have in the market, is you can't come in with that hubris.
That's what you just said. That last line is the truest thing about trading. If the market hasn't taught you humility yet, then you haven't been in it long enough. Yeah. It's that simple. If you get cocky and you think you know something in the market, you're about to learn a very expensive lesson. And I did after that trade. I've read so much about these guys who have had massive winning streaks and huge winning, life-changing trades. And normally you have your biggest losses after periods of your biggest winners, right? For sure. And so I was anticipating that actually as I was riding that thing up. And I had other winners at the time because the market was really strong. I was anticipating that. And so I was really trying to become really conservative at the end of that trade. And right when I sold, I was like, I know that all these great traders have had their worst losses after their biggest winning periods, because you become overconfident because you had this life-changing stock or these life-changing trades. All of a sudden your portfolio went from this level to this totally next level. It's a life changer. And then so you think you're better. You think that you can recreate this. Yeah. And so I was like hypersensitive of that not happening. So I wanted to like protect the change that I just had in my portfolio. I wanted to protect my portfolio over everything. And even though that was at the very, very forefront of my thought process for the next like 6 months, even though I still overtraded, I still made tons of mistakes, I was still overconfident. And I went through a period of real underperformance after that trade. Wow.
And how long did that last for?
I mean, it's even lasted throughout this year somewhat. It's interesting because I'm in that sort of competition with my buddies that I told you about. And so I have a small trading account that's like my competition account for that group.
Yep.
And then I have my normal taxable account and my retirement account at Ameritrade that I trade. And that's obviously like my nest egg, my everything I own, everything I have in my life that I'm trading. And so my strategy, my system is the same that I trade, but my strategy is different from my competition account. My competition account is much smaller, and my strategy for that is much higher risk, much higher risk tolerance, because I'm trying to beat my friends.
Totally.
And it's not
your face on their pajamas.
Yeah. And so even though I'm really not trying to blow up that account, it's not a significant amount of money for me. I'm okay if I mess up that account.
Yeah.
It's really just for fun.
Yep.
And so it's been interesting because last year in 2020, my normal trading account, my real trading account, I think it was up about 65% at the end of the year, which was good. But for the year, there was such a crazy growth stock year that I basically underperformed almost everyone who's doing my CANSLIM system that I follow. Most of those people were up over triple digits. My competition account in 2020 finished up 223% last year. So it outperformed my real account by quite a big margin. This year, my real accounts have outperformed my competition account by a huge margin.
Wow.
I think year to date, I'm up 30% on my competition account, and I'm up more like 60% in my real accounts.
Wow.
So it's been really kind of interesting and a good lesson for me to have a smaller account with higher risk that I trade as kind of like a barometer of how I should be approaching my real accounts. Does that make sense?
Yeah, it makes so much sense. It's a very creative way to test yourself in different environments and see how you do. And I'd be curious to see how it goes over the next 5 to 10 years with those two accounts too.
Same. Yeah.
Makes a lot of sense. Maybe that's worth people doing just for themselves, have they're in a position to have another account where they have a lot higher risk tolerance, learn from it. Like at the very least, you're just going to learn a whole bunch of lessons about yourself and about a different style of risk.
For sure. And that's something that I would suggest is instead of, I think it's been really, it's helped my learning curve personally to have this smaller account where I increase my risk and have the same strategy, but I definitely feel that there's a lot of lessons from that account. And so I feel like my learning curve is faster with this smaller account that I'm doing.
Yep. Well, it's more nimble. You can be more nimble in it too, I imagine.
Yeah. And there's a lot of lessons because there is a lot more, probably more hubris and ego in that smaller account because I'm literally trying to beat these guys.
Exactly. Absolutely. Shane, we could talk to you for another 2 hours, and we will probably invite you back very soon because this is such a good and juicy conversation.
Yeah, and I feel like we didn't even touch on surfing. So
it's funny because I thought we were just going to talk a lot about surfing, but I kind of warned you, Kim, that like once I go down that rabbit hole of trading, I get into it.
Our listeners are going to be very happy. I'm sure some of them maybe are interested in surfing, but all of them are interested in trading, so they'll be happy. But thank you. Just thank you for sharing, especially those charts. I'm learning a lot too. So thank you for teaching me, never mind the listeners. And if you would come back, we would love to have you.
Anytime. Thanks for having me, you guys.
Okay. Thank you, Shane. All right, guys, we'll see you the next time on the Wall Street Coach. And thanks for listening to us today. Aloha.
This has been the Wall Street Coach Podcast with Kim Ann Curtin. You can find out more about her and her team online at thewallstreetcoach.com. If you've enjoyed this podcast, please consider leaving a 5-star review on iTunes. Thank you for listening.